Hi everyone, I'm just in between appointments here in Langdon Hills, and now we're into July, halfway through the year. I thought I'd provide a quick update and a recap on the first half of the year for the property market in Langdon Hills. So the year started out incredibly strong. The market was really picking up after some positive news at the end of 2025. Mortgage rates were going in the right direction, were coming down, which meant there was a lot of activity in the market. Lots of new properties come to the market that were selling quickly, lots of buyers in the market as well because of the improving mortgage rates and affordability. So things were moving really positively. We're moving in the right direction, and we really thought we were in for an incredibly strong year for the property market, with house prices starting to increase as well because of that more activity. Now, because of a lot of external factors, in particular the war in Iran, which obviously has impacted inflation, cost of living, and ultimately as well the mortgage rates have increased over the last few months. So hopefully some more positive news recently, with rates looking like they might come down throughout the rest of this year from some of the headlines that are out there, which is really positive. But the war and the inflation and the mortgage rates has put more of a halt to the property market. Now, there are still properties coming to the market in Langdon Hills. They are absolutely still selling. Properties are still selling when they're priced correctly for where the market is. Most of the properties that I've had in Langdon Hills from the start of this year have sold. Most of them have, and that's the same for most of the properties that have come on the market. But what we are seeing is that the sellers are having to take slightly less for their property. Now, if they're buying on, that will balance itself out. It's not always about the headline sale price. Yeah, actually, if you're buying on and the difference you can get in what you would like to achieve versus what you do achieve on the sale, you can get the same difference or better on the one that you're buying on. That can actually then balance itself out, and it's the same as selling for the headline sale price that you wanted to achieve in the first place. So that's what we're seeing a lot in the market, particularly in the last few months, where it has been slower. In the market, it absolutely has been, and properties are taking longer to sell because there's less buyers, because affordability has become a lot more difficult for people because of the increase in mortgage rates. So that's been the real two differences. The first 2.5 months were incredibly strong for the property market. Now, that has slowed in the last few months, leading into July, but actually it does look like, hopefully for the rest of this year, that mortgage rates are going to move back in the right direction, which is going to improve affordability for people, and should mean a slightly, particularly after the summer holidays, once people are back and kids are back to school, should mean a stronger end to the year, particularly for the property market in Langdon Hills, which is always an in-demand area because of the schools and the station, the transport links. So we're really hoping for a stronger second half of the year, particularly after the summer holidays are over, as long as the mortgage rates start to move back in the right direction.